Hey guys, it's R Saba back with another YouTube video, and today we're going to be talking about why I am shorting the stock market. Now it would mean the absolute world to me if you guys could just like, share, comment, subscribe, hit that like button for the YouTube algorithm, and enjoy the video. Thanks guys. So today we're going to be talking about why I am shorting the stock market. You guys know me, I love numbers, I love making money, and the stock market is a perfect mix for that blend. So today, we're going to be going over some real life facts, some technical analysis, some fundamental analysis to explain why I am shorting the stock market and why I believe you guys should look into doing it yourself. Now, keep in mind, I am not a financial advisor, and this is not financial advice. We're just simply stating facts. However, if you watch this video and think maybe I should be shorting the stock market too, all the power to you. If you think I'm wrong and you're a full bull right now and you think the market's going to rally up, head in the comment section, tell me why, because I could be wrong, right? Anyways, we're gonna go into this video and I hope you guys like it. So first I want to talk about what happened, what initiated this decision of me wanting to short the market. And it all really started in 2020 when we got rocked with the coronavirus, a worldwide pandemic. And the governments of the world decided that it would be safe and we had to play it safe to keep everyone inside. And a lot of people weren't working, a lot of people weren't making money through their earned income, so therefore the countries had to print a load of money. Print money so people can start making money so we can get the economy going, because if we don't, the economy goes stagnant and that's not good. So we need people to spend money, correct? And when that happens, money's printing and inflation rises. As a matter of fact, if you look at this over here, 40% of the money supply printed in the US was printed during the pandemic, which is not good. So that's high inflation. What does high inflation lead to? Well, that leads to higher prices. And you guys know this, I don't need to tell you. Look around, look at gas prices, look at food prices. Everything is up through the roof. Everything is more expensive, housing as well. So when people have more money, people are going to be buying things more, which means demand rises, which means prices rise as well. Now, although that was the case, if you look at the stock market when the pandemic, when everyone was printing money, it was rallying like crazy. The economy was doing amazing. People had all these stimulus checks, all these CERB checks if you live in Canada, and people were just loving it, making money left and right, spending it in the markets. Tesla rallied, Amazon rallied, Apple rallied, all the stocks rallied, and everything was going good. Until late 2021 and early 2022. Now, for those of you that understand economics, you understand that bull markets and euphorias within the economy do not last forever, and we're bound to see some dystopian realities coming soon. Well, that is exactly what happened. It started in late 2021, around December. We started to see stocks going down. All the NASDAQ stocks that looked so green for the past 2 years ended up getting red, and we entered a bear market. So now we have to ask, how do we fix this? So the way that Federal Reserves and central banks like to fix these problems and high inflation is by raising interest rates. And let me tell you, they have raised them. So let's talk about that right now. Inflation in the year 2021, 2022 was so bad that they took the consumer price index, which is when they grab a basket of goods at the grocery store. For example, they could take steak, cheese, eggs, and milk. And they compare the price in May 2021 to the price in May 2022 to see how much it has increased. And that is the way of measuring inflation. It's not the best system and it's fundamentally flawed, but that's what we have. And from May 2021 to May 2022, we got 8.6%. Now, for those of you that don't know, that is higher than we've had in 40 years. 1981 was the last time we had an inflation rate that high, and it led to extremely high interest rates. Now, what do you think is happening to the interest rates right now? Well, today on June 15th, the Federal Reserve just announced a monstrous 75 basis point interest rate hike. This will have a huge effect on the economy, especially the rally that the housing market has seen in the past year or two. This will lead to people defaulting on their mortgages, because once they get their 5-year fixed rates over, they're going to see, oh my God, they need to renew, and then they're going to be, I can't afford it with this new interest rate because it's $700-800 more expensive per month. And on top of that, gas has gotten more expensive, groceries have gotten more expensive, everything has gotten more expensive. Do you think people can afford to have their mortgages more expensive as well? And that is just the tip of the iceberg of reasons why I am shorting the market. Well guys, that's it for the real life reasons. I mean, there's plenty more. You can go out there and do the research. I don't want to make the video too long, but right now I'm going to hop on the laptop screen and give you guys some technical analysis as to more reasons why I am shorting the market. Now, I want to start this technical analysis bit off by looking at the Dow Jones Industrial Average. So this is probably the best indicator for the stock market, as it is all the stocks, S&P 500 and NASDAQ, are more tech heavy, but this is a better indicator for all the stocks out there. So let's take a look back at 2008, 2009. That was kind of the last recession we had, and we can see that from an all-time high to low perspective, it dropped around 40%. And then since then, we've seen nothing but up. I mean, you have this COVID-19 crash, but I don't really count that because that was kind of just a panic, and they rallied back up right after. It lasted about a month. However, since then, the market rallied heavily. Let's look. The COVID-19 bottom to the high was an 87% gain, which is overbought. That's an extreme sign of overbought market. But like I showed earlier, that 2008 recession, we've had just nothing but a bull market for 14 years, which means we're due for something. And since, like I said, late 2021, so October 2021 until now, we are down 13% approximately. And that's just the beginning, guys. Most recessions don't even start until we hit 20%. And all the real life signs I talked to you about earlier shows nothing but the fact that we are in a recession. So I am shorting the stock market for that reason, but I'm going to take a look at the other indexes to show you guys more proof and more evidence that why I'm shorting the stock market. Now, some more technical analysis for you guys. We got over here the S&P 500, one of the best indicators for what is going on in the stock market as well. It's the 500 most publicly traded companies. And as you can see, we're in a downtrend. This is a 6-month chart, and we see nothing but a downtrend. Lower lows and lower highs. This went from being the low, and then it ended up becoming a point of resistance. When you see previous points of support becoming points of resistance, like you see here, this was a point of support, and look, it became a point of resistance. Same line. That's a sign of a downtrend. It doesn't seem like we're escaping that downtrend anytime soon. Once it goes below, this blue line is the 30-day moving average. Once the candles go below that, we get a red arrow indicating it's probably going to go down a bit more. This Koval indicator and the MACD indicator are also very good indicators for if we are overbought or if we are oversold, and they're also indicating nothing but down right now. They're indicating downtrends. If you want to look at the NASDAQ index, which is actually the index that I'm shorting, we got 3 red arrows. Once again, same thing, nothing but a downtrend in the past 6 months. It doesn't seem like it's slowing down. I gave you guys all the real life evidence that we are entering a recession, and it looks like it's unfolding right in front of our eyes. And just put the nail in the coffin, I showed you guys the Dow Jones earlier. I'm going to show it again. Past 6 months, we got nothing but red arrows. Now, right now, I'm going to get into what I am doing and how I am shorting the market. But, it's very risky, and it can lead to a lot of money lost. So I'm going to give an alternative to a less risky version that all of you can try. I am just so sure that the market is going to go down that I'm going with this risky version. Anyways, this stock over here called ProShares Ultra Pro Short QQQ ETF. This is the NASDAQ, but inverted 3x. So if the NASDAQ goes up 1%, this one goes down 3%. If the NASDAQ goes down 1%, this one goes up 3%. You guys get it. For for reference, like I showed you guys, the past 6 months, the NASDAQ went down like crazy. Well, look at this one. It went up like crazy. It actually went from approximately $30 to now, look, 93, basically 100% gain. You would have doubled your money if you put your money into this when the market entered a bear market, which is insane. I mean, who doesn't want to double their money, right? But I'm going to show you guys with this right here that Oh, wrong. Okay, so like I showed you guys earlier, the 3 red arrows, this is 3 green arrows. Nothing but up. We see nothing but up coming for this one, which is expected. Obviously, it's inverted, so this one's going to probably show 3 green arrows. But you guys are probably like, oh my god, I don't want to lose 3x of what I invested. That's too much. It's okay. We have an alternative right over here. SH, this is what I would use if I was doing the single pro shares short S&P 500, basically the same thing, but it's S&P 500 and it's not 3x. So if the S&P 500 goes down 1%, this one goes up 1%. If the S&P 500 goes up 1%, this one goes down 1%, right? And look, 6 months, same thing. It's gone up like crazy. Not as heavily as the 3x one, because this is 1x. So this one would have been a 21% gain had you invested when the bear market started. Now, keep in mind though, guys, that could be a 20% loss, just like the SQQQ could have been a 93% loss. So you have to value your risk and your reward tolerance. What is yours? I don't know. This is mine. This is what SQQQ is, what suits me best. Anyways, to look at the short S&P 500 technical analysis, once again, we got 3 green arrows, nothing but, and that is what we like to see. So, you know, these are the reasons I'm shorting the market, and we're going to go into some more real life reasons right now. And I'm going to give you guys one more real life example. This one is amazing. Once again, this is why I'm shorting the stock market. So like I told you guys earlier, we've seen the biggest inflation since 1981. And in 1981, we've seen such high inflation, we had to make the interest rate. So this is an interest rate chart from the past, like 50 years, 51 years. And you can see it peaks at 1981 because that was the inflation. It peaked at 18%. So we're going to get rate hikes like I told you guys. We just got one. We got 75 basis points on June 15th. So I'm going to play a conservative and compare 2 mortgage payments. One with what you can get right now at a 4.7% rate, which will give you a monthly payment of $2,084.88, like 4.7%. Now I played a conservative. I didn't go 18% because Lord knows if we're gonna get that. And I went 7.5, and we got $2,765. Big difference. It's a $700 difference with the price of gas now, the price of groceries. People will not be able to afford this. With the amount of people that bought homes in the past year or 2, even 5 years, when it's time to get a new rate and they see this, that's not going to be good. People are going to have to default on their mortgage. But I know you guys are probably interested. Like, what if we do hit 18%? So I went conservative again. I didn't hit 18% because I'm scared to look at that number myself. But I compared it with 15%, and if it hits that, we're going dark, guys. Like that's just scary. $4,900. I mean, if you got a mortgage and you're paying $2,000, I put $400,000 as a mortgage. That's like the average mortgage, I'd say, and it moves to $4,900. You're paying more interest than you are. I mean, let's just hope that doesn't happen. But that's my last real life example for you guys. And yeah, that's why I think the stock market is going down, and that's why I am shorting the stock market for the next year. Anyways, guys, that's it for today. This is why I'm shorting the market. I hope this was value for you guys. It was really just facts, knowledge. I'm not going to tell you guys to do it. This is simply why I am doing it. Don't forget to like, share, subscribe, comment, and wish me luck, guys, because I have over $10,000 US towards shorting the market. And if the market goes up in the next year, this might be the most embarrassing video on my channel. So anyways, I appreciate it, guys. Thank you.